Welcome to the Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So the market's trying to work its way higher, and even though we closed higher on the S&P, we closed slightly lower on the Nasdaq, but I think that I want to focus on the Nasdaq for a big reason. It moved down 190 points today from its high to its low, closed pretty much on the lows, and that just doesn't seem right with such a bullish backdrop. So we're going to cover that off today. So Nasdaq was selling all day. And can the old economy start surging? I think I pointed that out in an article, and I'll show you the article right away. And they did today. They were up nicely. So the transports, financials, including the airlines and the industrials, all started to look pretty well today. But underneath the surface was a big amount of selling in tech, and that's not quite great. So anyway, GregSchnell.com website is now open. And I've got a second chartered market technician on the site with me, Mr. Dwight Galusha, and he's putting together a whole bunch of charts every day that are nice trade setups for the following day or days coming up. And lots of compliments on them, both on the site and on Twitter, so feel free to go over there and start snooping around. And there's also some new stuff that we're going to get to. I'll show you that in a second here. But anyway, this week I've got a sale on memberships that will expire on May 31st. So it will be, you get all of these things, including the trade setups and everything. And that's going to be on the site, and you'll be able to qualify for that and use the coupon code DAILY5. I'll be doing one of those this week with StockCharts. So lots going on out here. Let's head over to Safari, my browser, and I just wanted to show you, I'll be setting up an Instagram account, and we're going to literally post some really, really basic stuff every day, taking a person who might never have looked at a stock and start posting information there about how to do that. And so there will be 3 different columns here, and the third one will get posted this week. But when they start getting posted up there, the idea will be for people who are very new, they'll be able to just quickly look through these videos, and they'll be, 1-minute videos, so very short. Anyway, that's what we're hoping to do. Here's the S&P 500 after Tuesday's price action. And I want to point out a small difference between what happened last week and what happened this week. So last week, the market gapped up on a biotech news from Moderna, and it ran up pretty much all day. And then the next day, it pulled back a bit and then ran up, and then it kind of drizzled into the weekend, and we end up closing pretty much where we got to in the first hour of the day on Monday. But on Tuesday, because Monday was a holiday, gapped up huge, tried to go higher and failed, and spent all day just trying to sit there, and then fell apart. So comparing this uptrend and how we finished here, that was not that great. From a momentum perspective, the PPO was higher here and is now looking like it's going to roll over and make a lower high over here. That's not confirmed yet, but we need to watch for that. Again, the 200-day moving average was at 3,000. We actually tried to stay above that, and then it ended up closing below that, and I'll show that on a few different charts in a minute. But here's the Nasdaq Composite, and the point I want to make on this one was it gapped up and then ran up all, pretty much into Wednesday. So it was pretty much 3 days of straight up, a 1 hour pullback there, and ran pretty good. What happened on Tuesday was it pushed higher and literally sold off through the day and never did catch its breath. And we ended up below where we were last Wednesday, unlike the S&P, but the Nasdaq really let go hard. So that was an interesting change. So I want to focus on that, because in the newsletter, actually not the newsletter, but in the article I wrote for StockCharts this week, the point I made was that the market was trying to work its way higher, and we needed to see where it went from here, and it's been really trapped in this range for 7 weeks. We were there on Thursday of I'll call it May 15th, and then rallied straight up for a week, and just continually finding this resistance up around 29.50. So in this article, I go on to talk about how trucking was starting to move and industrial starting to move, and I want to carry that forward and make sure that I share that news with you, because it was pretty bullish on Tuesday from that perspective. But from a lot of other perspectives, it left me really wondering what was going on. So I'm going to go through a bunch of the Nasdaq charts over different time periods, and then my goal would be to roll it out again. I've shown this chart before, or some of these charts before, but I've specifically set them up today so that it helps try to explain what we're looking at. So one of the big things that we saw here was the Nasdaq had topped out at 97.30 back in February. And again, this is a 60-minute chart. Now, if we head over to the right here, and maybe I can just get my pinpoint working. For some reason, that is not turning on. There we go. Okay. So the big thing here is we've got this big uptrend and we're testing it again. But not only are we testing that uptrend, we're testing the horizontal one. So we got to 95.08 today. And when you look back here, what happened is we spent 4 days, almost a whole week, right at this 9,500 level. And then we pushed above it. And then we fell back. And when we fell back, we just kept rolling. And so that was an important thing. And what we see on the PPO here is we had the original thrust and it was very high and it stayed up high. And then on each one of these rallies, of course, this rally took 3 events, and then this rally was kind of smooth and fell back. This rally smooth, and now look what we have. We have quite a bit of negative divergence on this one, whereas all of these other ones continued up, gave a pullback, and then started to run up. So the question we have to ask ourselves is, are we about to break down? Now, the only real look I can find on this chart, I guess there's a little bit of it up here, but this is the one that looks much more similar to me, where the momentum was waning. It wasn't very strong. It was at 1% instead of, say, up here at 2%. But we started to roll down, and we briefly gave it a push early in the week and then rolled over, and that really marked the start of the breakdown in February. During that time, the Nasdaq relative to the S&P 500 had a big uptrend going, and it managed to break that, and that was one of the other clues that we started to see. Now, I actually expected the Nasdaq to underperform on the way down for the big move down in the market. That didn't happen. Actually, the Nasdaq fell significantly, but it actually didn't fall as hard as the S&P 500, so that's why this chart went up during that period. What happened on Tuesday was we broke the uptrend, and now we're about to find out if we're going to break this big area of technical significance, which is that we were at a new multi-month high in terms of relative strength, and now it looks like we're breaking down out of that. So we've broken the uptrend. That's a big clue for me. And then when we start to break down, if we were to break down below this black line, that would kind of confirm more trouble for me. And looking in on the Nasdaq on the 60-minute chart, you can see that we're about to break this trend line, or we're going to test it. That's probably a better way to say it. But I think more importantly was that we failed to get through this level up here. And we always want to be aware of when you're trying to break through a former high. So I've set up some examples of that just below here, and I just want to show the Nasdaq on this other chart time frame here. This is the daily, and what you see on the daily, again, it's missing some of those 60-minute periods during the day. This is just based on the closing date or closing values, and we actually broke the uptrend line here. So that was pretty significant. And over here on the PPO, so we had been high and then we started to dip down here. What happened, we dipped down, tried to go higher, and actually ended up giving our second sell signal here. And now we have some negative divergence on the chart with the second close below the signal line. So one of the things I'm wondering about in general, so we have lower highs compared to 2 weeks ago, and this is the high 2 weeks ago. Sorry, this is the high 2 weeks ago. So we have a higher high in price and a lower high in momentum. And what we want to watch for now is does that end up rolling over the apple cart? So I'm I'm very I have trouble imagining that the economy is so good that we're going to take out the February highs, and I could be all wrong. But that's one of the things that's really at odds. So the real question is, as we come up and test this high, we always want to be aware of it. So let's go look at some of the prior tests of the highs. And so this is back in 2008, 2009. And what we saw was the market topped out in October, November, December, kind of spent some time up here, and these were, I'll call it, short rallies for roughly a week, trying to get back through the prior highs and couldn't do it, and so we rolled down. And then what happened is we came down, and the Nasdaq rallied and rallied and rallied, and you can see the S&P topped mid-May, and then the Nasdaq actually made it into the first part of June, continuing to try and go up while the S&P was falling away. They may or may not work like that, and we can add the Dow on here. We'd get different data. But one of the things that was important is we were trying to get through this, either the 2238 or even the secondary high here at 2150, and the market got up against here and just stalled and couldn't get back through those prior highs. And as it rolled over, then it fell down for almost a whole month, tried to rally again, couldn't get through prior highs. And so we end up with a series of lower highs. If we look at the S&P 500, we end up with that same sort of series, but we had a couple of tests of the prior high, and then this was the big 2-month push. And what you see is we briefly got above kind of an area we were trying to break out of, and as we did that, we tried to rally up. So the Nasdaq actually got a lot closer to its, I'll call it, to its December high than the S&P 500 did. But as they rolled over from there, then we ended up marking down meaningfully. In the case of the S&P 500, we actually took out the prior lows. In case of the Nasdaq, we did not. So that looked pretty bullish until it all fell apart in early September. Anyway, we don't know anything on the right-hand side of this chart, basically from here forward. We just know that we've had a high, and we moved down to a market low, and then we tried to rally out of that low. And on doing that rally, we failed to get back through to the prior high. Now, sometimes you can get back through to the prior high. Like the Nasdaq actually topped late October, early November, and the S&P topped early October. So it actually topped 3 weeks before the Nasdaq finally made its final high. It all looks so subtle when you're not trading through it day after day. When we move forward to 2015, one of the bigger issues came in here. So the S&P topped in May, and as you can see, the Nasdaq kept riding up and made a new high, a significant new high in June, and this was pretty much all done in a couple of days. But it ran up, had no real power, and then pulled back, and then fell away from there. What happened on the S&P 500 was it kept trying to get through, I'll call it this 2120 range, oh so long ago, and tried to get through this level. And on its way down, when it kept testing and couldn't break through, and all of a sudden the Nasdaq surged, you can imagine that set off some euphoria that everything was going to be okay. And what we got here on the S&P was it continued to stall at this prior level. So today we have the opposite. We have the Nasdaq actually taking off, and I'll show that chart. It's been up, 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 much like this, but it's actually run up all the way past its 200-day moving average and is up testing highs. On the S&P 500, what it's actually doing is it's more like this, where it's testing its 200-day moving average, but still well off the highs. Anyway, we don't know how it works out, but the point I would make is anytime you're testing these prior highs, and this S&P, look at this, it spent 6 months grinding higher here, trying to get through, and then just fell away. The Nasdaq basically ran up, held it for a week, and then fell away, for a long period of time, almost 6 weeks, in a big decline, and then tried to rally out of the hole again. Got up here, retesting the highs. The S&P couldn't get up anywhere near the highs, and then it fell away again. So when you're testing a prior high, always good to watch. Now let's go look at the 2018, the September market top. So what happened here was the Nasdaq was testing its prior high, ended up failing here and rolling down. S&P had actually gone on to prior highs, so much like today where the S&P is holding up a little better than the Nasdaq based on one day, and the Nasdaq, so the S&P was still up today, but the Nasdaq was down. And then what we see in this particular case is as the market fell away, it was this test of the prior highs. The S&P was up slightly but couldn't really get through it. And for the NASDAQ, it was struggling at the same prior high. So those are all important. And now I'm going to roll forward. And again, notice here in 2019, we're coming out of this hole. We're trying to get through this level. I can move this date slider forward and just show you how it ended up happening. But it finally got through this level, stalled, and then took off and went for a pretty good run. And that was April, big pullback in May, and then took off early part of June. Now let's go to our current situation. And again, we're testing this prior high. And one of my big mental hurdles is that, the economy is nowhere nearly as strong globally as it was on February 21st. So the stock market is running and running and running, and now we're here testing a prior high. And I think at that point, there's a good place to expect a gut check. Like, do we really have the best economy going, or do we just have a lot of Fed support for the current situation? And that is true, and there's no denying that the Fed can actually alter the chart, and I think has done so since early on here. A lot of this rally has been on the back of, they've tried to take the big downside out of the market. The real question will come as all of these bankruptcies start to show up like Hertz, and perhaps a few airlines start to struggle. When all of that storm starts to happen, it takes more than 3 months for a company to start to roll into bankruptcy. But once they start to do that, and we've seen Cirque du Soleil and we've seen other entertainment companies, we're probably going to see some pressure on things like movie cinemas and stuff like that, where they just have had no revenue, and now they won't even be able to fill the seats less than or up to half full. So all of a sudden you've got all of these major issues for these companies, and can the market really go there? We don't know, but this is a great place for us to expect resistance as we get towards the prior high. So here's the S&P 500, and again, we've been spending about 7 weeks in this range, and briefly we tried to push above it today, and after the push above, the S&P held up okay, but it ended up closing, I'll call it, at the lowest value of today, even though it was higher than yesterday. So it gapped up and ended up selling off from beginning of the day to the end of the day, and didn't make any real progress during the trading day, unlike last week where it was trading up through the day. Okay, so again, the lesson is that we always want to watch anytime we're trying to break through the prior highs. That's a really important level. Okay, from the S&P 500, the big thing that, and I've done a couple of shows on this, was how the market behaves in a bear market around the 200-day moving average. And we thought that was probably a month ago. I covered that off, where we thought we might get up here and then we'd see if we had the strength to get through it. The concern we have today is we traded above the 200-day moving average, ran up and immediately fell back and ended up closing below it. So this was a good place to test the 200-day moving average. Not that it's a line in the sand. It will probably be tested all this week. But the real thing to look back at was this was also a major area of resistance back in 2019. And so we rally up to this place, and that's where selling hit here and here and here, and then it finally worked its way through. What we had going on in the economy back then was a lot stronger than what we have going on here. So it would be interesting to see if we can actually continue to go higher. As the market has been going up, the volume has been dropping. So let's just see how the rest of the week plays out. But my expectation will be that we'll probably struggle and end up going lower. The real question is the second half of the story, and that is, can the things that weren't tech and biotech start to rally. And what we did see out of that group today was very nice performance. Now everything rallied up to start the day, and again we end up with this kind of a price action where we open the day, so this was Friday's close, we open the day way higher on the Tuesday morning, try to go higher, and end up closing very near the lows. So this is what we would call a bearish reversal. And when we put it in a candlestick form, you end up with this big dark cloud. So you close up on the day, but you close down. And so we saw one of those in here. All the way through the bear market, you see quite a few of those where you open the day up, or you try to open the day up and you end up selling off all day. So the rally is unable to hold. When we look at the XLY, you can see we're back up in a level of resistance again. And when we go look at the big FANG names, and we'll try and do that here in just a second, but looking at across the market, what we want to see is there support for this? So last week we didn't have one of these where we sold off all through the day. We had a couple of sideways trading days, but we didn't have this big overhang, a black cloud. Typically they're associated with a market top, or in this case what you can see is they happened a lot during the downtrend. So now what we want to go to is the communications group, and they have the same price action, opened on the highs and closed on the lows. We still closed above the prior day, so it sounds bullish and everything sounds bullish, but in fact there was selling all day while the market was open. And when we go back and look at this on a horizontal basis, we're kind of at that resistance, or what was support, now resistance level. Let's just draw a line at 54. And what we see here is this 54 level was pretty much the support in here. So that's XLC, XLK, the technology, same thing, opened on the highs, closed on the lows. And in this particular case, we actually closed lower than the last 2 days highs, and the last 3 days highs. And at the lowest close, lower close than Friday, but not than Thursday. So back into the middle of the range for last week. So for technology, that's a little bit surprising, right? That one's been the big drum to hammer on for everything bullish. So here's the XLI, and this was clearly a nice big breakout, and it opened low and traded up on the day and closed higher. That looks very good. PPO trying to get above zero. So now what we need to figure out is this difference. Is it just a sector rotation from technology into old economy, trucks and transports and airlines and industrials and banks? Or is it something more meaningful where the growth stocks are getting sold off, and okay, so these stocks gapped up. The real question is, if there wasn't a gap in the morning, would they have done anything? And so let's watch for the rest of the week and just see how it plays out. But this looks way more bullish than those technology or communications areas. And here's the basic materials. It tried to close higher than last week, and it did. I would just say, once the market opened, it really didn't have any thrust up. So we had this big overnight move and then nothing. And last week we had the same thing, a big overnight move and then nothing all week. So it looks a little bit more bullish. We still need to see it follow through. And I've drawn the 100 period moving average on here, not the 200 in this case. But the right answer is we want to watch and see how these other groups start to perform. So if industrials are going higher, we would expect the materials that they take and make into products to force both those groups up, and then transports to move them around. Okay, and then here we are with XLE. It gapped up, but didn't do much, right? It was basically at Thursday's high. So let's just say it's still trading in the range. XLP gapped up hard, couldn't get above the prior high, so it's still just going sideways, nothing really signifying here. If this was to start to turn up and everything else to start to turn down, that would be our rotation into defensives. But the big thing that we're watching for here is if everything is going to be, I'll call it slower, I wouldn't expect these names to rally much better than anything else. So here's the healthcare, and sideways for the whole month. So this was, again, one of the big growth areas that we've seen, and it gapped up and then closed near the low. So selling into that high growth area as well. XLU, the area that we're looking for here, same thing, gapped up and then closed near the low. So not a very bullish candle at all. And the financials, this one was a nice pop, right? We basically got above my Keltner band, and as we jumped across it here, we still have resistance up around this 23-24 level, and every other time we gapped up there and fell down, and here we gapped up and closed lower, then tried to gap up again. So let's just see if this is another false breakout, but at least we had some volume hit it. And Canadian banks were starting to report this week, and so maybe they can actually help start the sentiment by announcing what's going on inside their banks. We won't hear from JP Morgan and Wells Fargo until early July. Okay, looking at XLRE, the real estate, and again, that's such a hard hit area right now, and yet it still popped up, but it didn't do much all day. It basically gapped up, traded around where it tried to trade higher, tried to trade lower, and closed where it opened. No real movement other than the big gap up overnight. Okay, let me go get one other chart here. I think I can do it from here. I have a chart called FANG, and some of you might remember it. But what this chart does is I've put a lot of the big names on one chart and then just go see it. So this is the first time that Amazon has closed below this trend line. And again, it was trying to take out prior highs and pushed up on Thursday and failed, and now briefly weakening. Now, it wasn't down hard, it was down 0.5%. But again, we're trying to get through those prior highs. Same thing with Apple, trying to get through those prior highs. It gapped up against them and had this big dark cloud. Facebook has been trading really well. It finally broke out, and this was a big dark cloud and closed lower than Thursday. But what we still want to watch for, at least Facebook was getting above its prior levels, unlike Apple. Google tried to gap up here and get into this gap from before, and while it was doing that, it ended up rolling over, so a dark cloud, but still part of the uptrend. Netflix is clearly letting go here. This is 5 in a row selling days, so that one looks weak, and Microsoft is right back to the trend line, so that's another area of concern. Looking over here, you can see Microsoft tried to get through prior highs. We've got this line on here, and it just can't do it. So here's another example where we're testing a prior high, using it as a reference point, and we were unable to break through. Netflix broke out, that's very bullish, came back down, tested that breakout level, and then rallied back up, briefly got above the prior highs, and then failed. Always a great place to check is prior highs. So here's Disney, and we got to new 3-month highs, and this chart still looks up and away to me. The theme parks are trying to go, ESPN is trying to go, so there's a lot of reasons for that to happen. Okay. Lastly is Tesla, and it hasn't gone anywhere, and they're going to launch a rocket into space, or Elon Musk is going to launch a rocket into space carrying astronauts tomorrow, so that's a pretty big deal, or on Wednesday. So with that, thank you for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern. You can also see the recordings on the StockCharts YouTube channel, and you can also find my US and Canadian market reviews on the StockCharts YouTube page. With that, trade carefully here. We're testing that resistance level, and hopefully we can get through, but it's an important place to keep watch out. So thanks everybody for joining me, and trade safely. Talk to you soon. Bye-bye.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.